You can get a lot of the information that I can provide you. There's tools you can use. Some financial services companies have self-service options or call centers. But the big problem with that is, first of all, it's not necessarily tailored to you. Second of all, fine, you get all this information. What do you do with it, right? So you can do research on investments. You can learn if this is a good company or not. Okay, so now what? How much do you save? Where does it go? What are the tax implications? Is this too aggressive or too conservative? Does it make sense for you? You get all this information, you have no idea. So the idea is to sort of tailor what you're doing to that person's situation. But the biggest thing about planning is that all of these things fit together, and that's one thing that a lot of people don't necessarily realize. Everything affects everything else. So you're investing, right? Let's say it grows well. Okay, well now you have a tax issue you have to deal with. So you need to make sure that you're tax efficient in the investment. Or maybe you now have an estate planning issue. Or you need insurance, so you buy a lot of insurance. Okay, well now you are spending so much money on insurance that it's impacting your ability to save for your goals. I'm a big believer that you don't want to spend more protecting something that impedes your ability to have it, right? If you are buying a home, right, and the home is too expensive, and now it's impeding your ability to save for college or do other things. So the idea is that all of this has to fit together to make sure that you have a cohesive plan, and people don't necessarily think about the fact that you need to be looking at your taxes, education, estate plan, risk management, goal accumulation, your cash flow, your emergency fund, and doing it in the most cost-effective and tax-efficient manner. Ultimately, if we're doing our job right, we shouldn't really be costing you money. It doesn't mean I'm going to work for free. I have bills to pay just like everybody else. But the idea is that if we're able to improve your cash flow, maybe help you with your debt, help you get a return that's more consistent with what you're trying to do, keep fees reasonable, taxes reasonable, you're better off. And that's kind of the idea of the process. So let's talk a little bit about investing for 5 minutes. So there's a couple just key points I want to make about that. So if you remember when I was showboating a couple weeks ago, I gave you that chart, right? So you didn't see it, but and it was very colorful and had different types of investments on it. And what that was really showing you was the idea that there is no discernible pattern of what's going to do well at any given time. And that's the problem. People are always trying to chase the wave. So there was a study by Harry Markowitz, who is the father of modern portfolio theory and asset allocation. Okay, he won the Nobel Prize for Economics in 1990, and what he found is he was actually doing research for institutional pension funds from the 1950s through the 1980s, right? And what he found was that overall investment returns are based on three things primarily. Okay, the diversification, asset allocation of portfolio, market timing, and security selection. So show of hands, who thinks that market timing is the number one cause of investment performance? What about security selection? You pick the right securities. Sorry. Asset allocation, 91% over the long run. Yeah, sure, you can get lucky and hit a hot stock or whatever, but that's not really investing for the long term. That's speculating and trying to grow, and you may get lucky, right? But the idea is that no one knows what the market's going to do. Guess what? Yesterday, I was so busy with the house and my class and all that, I have no idea what the market did yesterday. And you know what? I don't care. Hopefully it was down because yesterday was the day we put money in our daughter's college account,